All right. Well, once again, good morning, everybody. This is Brian, and we're here for Forex Live. Today is December 3rd. Coming on to the end of the year, we've got probably another about 2 weeks of solid trading, and then most of the big players will be gone for the remainder of the year. So we've got a few more sessions. We'll still hold sessions, even though it's getting into the thin period. But yeah, a couple more weeks of trading. And that's it. We're going to wrap up 2013 and ring in 2014 very, very soon. Before we get started with our class today, I do need to let you know that unique experiences and past performances do not guarantee future results. I'm going to read this in my radio voice. Trading involves risk. Yeah, I think everybody here knows that. We know that trading involves risk, but in the event that you don't, please be sure that when you are trading, you only use risk capital. It's you make some bad decisions if you've got to make that payment every single month on credit card interest, or if you're taking out a loan and Guido's going to come take your kneecaps if you don't perform. So just be sure you keep that in mind. We're here to talk and train and to teach you how to use Forex Joe's methods. Nothing's guaranteed in our classes. Nothing's guaranteed in trading altogether. So please keep that in mind as you move cautiously through the Forex marketplace. All right. What are we going to do for the day? Well, today, this is our morning class, and I like to use these mornings as an opportunity to show you how we use the daily trading regimen for live trading. This is Forex Joe's process for looking at the market and entering the market with all the necessary data. So everyone should have open a copy of their live trading form, and this can be found in your members area under downloads. You can either do it electronically. You can pull it up. There's a Word document. You can fill it out electronically, or I'm still pretty tactile, and I like to print it out and actually write on it. Does a couple of things for us. Keeps our fingers off the button until we gather all the information. Secondly, it also acts as a trading journal, trading log, so we know what we traded and why we traded it. So it's important to write it down and keep the notes. Of course, after class, we'll record a recap video and post those on our YouTube channel, so you'll be able to go back in and see what we did, how we performed, if we were good, bad, or just horribly ugly. Sometimes it's great, sometimes it's not. That's part of trading, and that's part of the trading mindset. You need to understand that we're not going to win every trade, and mitigate that risk by limiting how much we're risking at any one time. So we're going to be going through that. We should also have open your trade alert from Forex Joe and the daily report, and utilizing all of those pieces, we'll be able to put together the puzzle and see what trades we can find for the day. So let's go ahead and get started. We're going to begin with the Euro USD, and currently the Euro USD is trading at 35.85. 35.85. So I'm just writing that down on my daily trading regimen, 35.85. And looks like we're in a bit of an upward trend, huh? Well, let's see. Let's see what information we can gather. So first thing to do is write down the current price. Then we're going to pop over and record our channel information. In order to do that, we need our daily report. So we go here, and we're able to see our channel tops and channel bottoms. So right here we see that we have a channel bottom at 34.88, 34.88, and we have a channel top at 35.77. Looking above that, no real alignment as far as immediate 2 of 3 or 3 of 3 channels. We do have a 2 of 3 channel down here at 33.29. If we do break back down to the low side, nothing in alignment here to the high side. So we're concerned today with 35.77 and 34.88. Next up, support and resistance levels. What are we seeing as our potential support and resistance levels? Well, we're currently trading at 35.84, so that tells us that down below us we have support at 35.77, which also coincides with our channel top, so that's a little bit of a heavier level. If we break below that, we have 35.67, and then 35.60. To the upside, we have 36.14. So if we continue up, we'll be looking to potentially move through that 3600 level, which is a major psychological level of resistance for us, to that 36.14, and then potentially even 36.20. For the day, next question we're going to ask ourselves is, are we trending or oscillating? So is the market moving up or moving down? And for the day so far, looks like we are in a bit of an upward trend. I think we can all agree that's an upward trend. And the next question, though, that really kind of hammers it home for us is, has the channel been broken? Have we broken above 35.77 or down below 34.88? And the answer there is yes. Yes, Bob. We have broken above 35.77, broken above and closed above. So, yep, have done that. What's our average range? We ask ourselves this for, to make sure that we're not, buying the very top or selling the very bottom. What's the average range of the pair? It's important to know, so we know, kind of where we are for the day and what we can expect for the remainder of the day. So right now, we've seen that we've moved 68 pips, almost 69 pips for the day. Average range lately has been kind of low. It's been lower because we came out of the summertime and then into a summertime or into the government shutdown. But typically this pair moves 80 to 100 pips. The longer term average has been closer to 70 pips, but we know it's somewhere right there. Next up is news. What news is coming up? What we have to contend with? To find news, you can use a couple of different sources. I prefer to use Forex Factory. There's also FX Street, Bloomberg. There's a lot of places to get your news out there. Forex Factory displays it for us in a very nice, concise manner, and even color codes the impact for us. So I like using Forex Factory for that. So what we look here is we see, are there any red reports coming out, in the immediate term, in the next hour or so, that we should be concerned about, or even for the day? And we don't see any high impact reports for the U.S. dollar or for the euro planned for the remainder of the day. We do have some reports coming out on vehicle sales, but those are low impact. And then the next high impact report is until this evening when we have the Aussie GDP. So news, pretty light news day. There's no news today. And the last thing that we capture before we jump over and start putting some lines in the chart and looking for potential trading areas is what's the futures market doing? And we like to look at this just to make sure that this kind of gives us an indicator of where the lean is for strength or weakness in the U.S. dollar. And we can see that typically, and this is a good example of an anomaly. Typically, as we see money flowing out of the Dow, out of the S&P, out of crude, out of gold and silver, you see that money flowing into the U.S. dollar. Typically, as money flows into these, it's flowing out of the dollar. Now, today, it's an anomaly. We're seeing the Dow dropping, but also we're seeing the dollar dropping, and that is an anomaly. So that's just a good point for us to be cautious. When you see something like that, where it's not performing as you would expected, as you might have expected, it's a good time to take a step back and be cautious in the marketplace, because what can happen is something might occur and we'll see a whip in one of these. Either the dollar will rally and push either the Dow will rally and push the dollar lower, or the dollar will suddenly pop as the Dow moves lower. So we just need to be careful here. This is telling us, a heads up. Let's be careful. This is a non-farm payroll week, by the way, and we do have an ADP coming out tomorrow, which is the precursor to the non-farm report on Friday. So a lot of times during this non-farm payroll week, you'll see some anomalies like this occur as the market makers maybe reposition their levels of risk and reposition where they are. So that may be weakening the dollar, right now, or weakening. I shouldn't say that. That's a bad term. They might be repositioning where their risk levels are on the dollar, which is pushing it lower, or repositioning where they are in the Dow, just pushing it lower, with no real rhyme or reason other than they're just kind of positioning themselves prior to the report coming out. So remains to be seen, but at any rate, be cautious when we see something like this where they're not moving inversely. We should see the dollar inverse of what the Dow is doing. So that's just a cautious little sign for caution. All right. So anyway, right now, looking at the dashboard overall, we see a slight lean to the negative side, which should give us dollar strength, but it's not presently. So it's got me a little bit on the cautious side. All right. So with that said, what do? Well, we gathered a bunch of data. We got our channel information, our support resistance levels. We know if we're trending or oscillating. We know where our average range is, and we know what the futures market's doing. So we've covered a lot of information in a pretty short amount of time. I mean, even with chatting, it's only taken about 12 minutes to gather that. And now we can go and place our lines in the chart to see what levels exist that we could be trading off of. So first thing we see here is 35.77. Well, that was our channel top, and it's also a point of support for us now. So 35.77 is an area we've broken through. We've closed above it, maybe coming back to retest that here. So 35.77 is a big area for us. If we break below that, we have 35.67, which is right through here. A little bit lower. It's actually right about there. 35.67. Another area where we saw price move up. It struggled over the London session and finally broke on through. And then above us, we have 36.14, which is right down here. Get this out of the way. I had these, I need to change my lines back. I color-coded that yesterday during class when we were looking at a 3 of 3 channel on the Aussie USD. All right, let's just change that back to my normal purple line. I like to use purple because it doesn't get confused with the ask line. Not that you would ever get confused with the line way up here, but if price is trading right around it, it's easy to lose your support line in the middle of other things. All right, so here we go. So we've got support here. We had the channel top, which was broken. We've got, so as we know, if we've got a key level and it's resistance for us, once that resistance is broken, it becomes support. So we broke through this 35.76 and hadn't retested it yet. Looks like we might be coming down to do that. So we can go ahead and park a buy order there. I know it's kind of tight. I don't know if it'll let us put it on that close. And where'd my stop loss go? 35.25. It's hiding out. That stop loss ran away from me. Did you see that? Just took off and was hiding behind that sell line. All right. So anyway, so there we have that one, and we can park an order. So what we're looking to do here is park an order here at 35.77, keeping our. Let's go ahead and get this on real fast. Looking to take our profit quickly, and then also looking to keep our level of risk pretty low as well. So we'll do that. We keep our risk at, we're looking to get profit about 6 or 7 pips, and we're looking to keep our stop loss at about 7 pips or so. So here we go. We've got this trade on. We'll let that one roll. We could stretch this out a little bit on take profit too, but I'm not going to. I'm going to. I don't know why I can't see. Everything's moving except my line. Sometimes those, there we go. Sometimes those lines will get squirrely on you. Okay. So there we go. So I've moved using using the pending order software, I've moved my green lines, which are the buy lines, into place. I've set my buy order to the target where I'd like to get in. I set my stop loss to where I'm comfortable with the level of risk, and then I set my take profit 1 and take profit 2. Once that was done, we clicked move to buy, and it put us in the market. Now from here, once this trade's on, we can still modify that trade if we wanted to. Which really you shouldn't do. You shouldn't. Once you've set a trade, once you've done your research and set a trade, you should stick with it. But let's say you wanted to just slightly modify your stop. You could just simply drag that down to modify your stop level. You could move your take profit 2. You can move your take profit 1, whatever it might be. So once that order's on, you can just you can move that around to change just by dragging the lines in your chart to change where you are for order management. Now we'll put on a sell order as well, and we know that we have 36.14 is a resistance level for us. We also have a thermal grid at 34.18, about 4 pips above, and we can put these on as well to see if we can find some pips on the sell side. If price does move all the way to that level, we would certainly be looking to sell it, and here's why. Let's find where my stop loss went for my sell. 35.50. Here it is. Just hiding behind that line. There we go. All right. So we can put on some sell orders as well, and we'll park a sell up here. And here's why. If we get to 34.14, that's about 88 pips. If you even get here, you're 93 pips. Typically, this pair ranges, 80 to 100. It's been lower. We've been kind of range bound recently. So if it did push this high, if we did push to 36.14, I don't know why I said 34. If we did push to 36.14, we'd really be pushing the end of that range. Now, does it mean that price can't move through that and move further? Well, no, of course not. It could move 150, it could move 250 pips, but the likelihood is greatly diminished. So again, we're just looking for the slight advantage, those probabilities that are going to give us the highest levels of success. So we know that if a pair typically moves 80 to 100 pips, and on a kind of a range-bound market, we're at 88 pips, it's a pretty good opportunity to look for a reversal there. Now, obviously, we want to give it a little bit of room to breathe. We're not looking to stretch it out too far, but obviously, it'd be a great spot to look for reversals, so we'll put that on. We'll keep our take profit 1 about the same as our level of risk up here. Once that's set, once we get everything set where we'd like it, we have our maximum risk established, we have our entry point, we have our take profit levels established, then all we have to do here is move to sell. So you select move to sell, we move it, and at that point it just takes a moment for everything to tick over, and voila, we have a pending order placed as a sell limit. So if price does move here, we'll be entered at 36.14. We're hiding out, staying behind, behind our thermal grid. In the event that it moves through here, this would be another good stopping point for it. And look for a reversal on that. Just simply, even though it might be counter trend, because it's the end of the range, we're comfortable with looking for that trade. So there we go. Now I'm going to make a quick note. So give me just a second. A quick note as to what I entered here and why I entered it. So I'm just writing down on my notes section of the daily regimen exactly why I placed the trades where I placed them. And this also helps me for when I go back and do the recap to talk about what we did and why we did it. Even though it's only been a couple of hours, you know how that gets. Sometimes you get doing other things and you forget all of your actual reasoning behind why you did certain trades. All right, great. So we got those on. We have 2 trades on for the Euro USD. And now let's move on to the pound. So that took us about 20 minutes, but typically if you're doing this on your own, you're not talking about it, you're not trying to do a level of education it'll take you much less time. I mean, typically you can move through 3 or 4 currency pairs pretty quickly in about 10, 15 minutes. Once you've been doing this for a while, you can move through this very quickly and get your trade set, which then gives you the opportunity to move on and do other things for the remainder of your day. All right, so here we have the pound USD. What's going on here? Well, we're currently trading at 63.94. So current price on the pound USD is 63.94. And what's our channel information tell us? Well, pop over here to the daily report, and we scroll down to the pound. Here we are. And on the pound, we see that we have a compressed channel, our daily channel. We have a channel top at 63.98 and a channel bottom at 62.99. All right, support resistance levels. Well, we're currently trading at 63.94, so we know that we have 63.90 right here below us, 63.90, and 63.98. So we're kind of caught in this little box between two support and resistance levels. Below that, we have 63.42, and then 62.99, which is also our channel bottom. And then to the upside here, we have 64.41 if we break through that, followed by 6,500. All right, are we trending or are we oscillating for the day? And looks like for the day we've been in an upward trend. So we've been trending. Has the channel been broken? That's the big question. Have we broken through 63.98 or 62.99? And the answer there is yes. We absolutely have. We broke through. This is our channel top. We broke it and closed well above it. So yes, the channel has been broken. Average range. Well, again, today we've moved about 90 pips, and average range for this pair is has been about 83, just because it's been slightly range bound. But we know that typically this pair moves 90 to 100 pips, sometimes a little bit over into that 110, 115 range. But we know about 100 pips on this one, and we have moved 90 already for the day. News, well, we know that there's no news coming up, and we know that the futures market has been mixed. It is actually in a in kind of a caution state, in that we see the Dow and the dollar both dropping, which typically doesn't happen. They usually move inverse of one another. So just again tells us to be cautious for the day and really limit our risk. I mean, typically if we weren't having a class, I probably wouldn't even trade right now, because this would freak me out and tell me to stay on the sidelines. So anyway, what are we going to do? We've captured a bunch of information, and now it is time to place some trades. So we know that right now, we just mentioned, we're kind of caught between a couple of different decision points. We had a channel bottom at 63.98, which was here. Let's put that on. And we have 63.90 as a support resistance level, actually a support level for us right here. And we may be caught between this little area, so we'll need to look for a break one direction or the other in order to find a trade to enter. 64.41 is also a resistance point for us. We didn't quite make that. And down to the low side, we have 63.42 as another resistance point down here. So really not a whole lot. I mean, we do see some grids using our thermal grid system. We do see some grids in between, but if we're just using support and resistance, there's really not a whole lot for us in between these areas. So what we'd look for here is we can put on a couple of different types of trades. First thing we would do, we can say, okay, if we're going to trade this live, what we'll do is we'll wait and see if we get a break below 63.90. If it breaks and closes below 63.90, we get a second candle confirming that downward direction. Then we would look to sell it on a retest of 63.90. Conversely, if we break back above here and we go back above 63.98, then we would look for it to close above 63.98 and push on and if the second candle confirms it, then we would look to buy on a retest of this level. So right here at this little decision area, there's not a lot of not a trade I can put on. Now we could, if we wanted to look to scalp, we could go ahead and park a buy order here at 63.90, looking to take profit at 63.98. I'd pull both my take profit 1 and 2 off, and then the other trades would be to park a sell and a buy down here. But let's just go ahead and park this shorter term trade, which we can park here, and I'm going to peel both of my levels of profit at this 8 pips level right here, and I'm going to manage my stop loss, pull him right up here, so we keep our risk low, and then we'll park our sell order right up here at 64.41, and keep that risk fairly tight as well. 64.41, I'm saying the reason I'm parking it here is if you push that high, we're really, again, looking at the end of our range. We do need to give it some wiggle room to potentially break through there, but 90 pips top to bottom, our average range is right about that, so we can feel comfortable looking for a reversal here, and even though it's counter trend for the day, to see if we can pick up some pips off of that 64.41 area. So that's what we're going to do. All right, get that one set. Once those are set, I can simply move to buy and sell, and we have both of those orders on. Now, I do think the best trade here isn't really just to park this. I think the best trade here is to wait and see what actually occurs with this area. I would like to see it break back above and then buy on a retest, or break below and sell on a retest. I think that's the best trade. We are parking, however, 63.90 is a support resistance. It's actually a support level, but a support resistance level on the report. So we're going to park a buy there just to see if we can get a quick scalp trade short term. But honestly, I think that the best trade is to wait and see if we break out of this little 8 pip range right here, and then buy or sell it based on what we know for directionality. So if it breaks back above, closes above, and then buy on a retest, breaks below, closes below, and then sell on a retest here. That's the best trade. But we're going to put this one on 63.90 just to buy as a quick scalp trade from the daily report. Okay, so, all right, let's do one more. Let's do one more real quickly and see what we can come up with. It'll go even quicker for the last one that we do, because obviously we're not going to have as much. Well, we'll go quicker because we've talked a lot about what we're doing, why we're doing it. So the time should go pretty good for us. All right. So do we want to do the Aussie or the yen? Both are good. Let's do the yen today. We've been doing the Aussie quite a bit. So let's look at the USD JPY. And we're currently trading at 102.48. And what's our channel information telling us on the US yen? Hop over to our daily report. And what we see here is that we have a channel bottom at 102.57 and a channel top at 103.47. All right. Support resistance levels. Well, we're currently trading at 102.47, so we've broken through that channel bottom. So what do we have? Well, down below us, we have 102.13, and then below that, 101.32. To the upside, we have 102.57, which is also coincides with our channel bottom, so a little stronger number there. And then above that, 102.66 and 103.11. All right, we're trending or oscillating for the day. I think we'd all agree that we're in a bit of a downward trend. So trending or oscillating, we're trending down. Has the channel been broken? That's always the key question for us, and the answer there is yes. We certainly have broken below that 102.57. So yes, we have. Average range, well, we've moved 100 pips today. And that actually is a little bit high for what we would normally see on this pair. We're typically, 80 to 90 pips on this one, and today we've moved 100. So might be starting to look for potential reversal points. But let's just see. News, we know there is no news, and we know the futures market's mixed. The big thing here for the futures market, floor traders are just coming online at 8:30 Central, 9:30 Eastern. So it'll be interesting to watch and see what pans out here now that we're getting out of electronic trading and more into the actual floor trading on these bits, and see what the Dow is going to do for the day and what the U.S. dollar is going to do for the day. See if they're going to stay with this funky situation, or if they're going to move back in to what we would normally expect there. So just keep that in mind. So let's see. First thing we have here is we have this channel bottom. We came and we hit 102.57. We broke it, and we haven't retested it. So obviously the first thing I'm going to do is park a sell here at 102.57. We're going to get that. Keep our risk pretty low. Going to take profit quickly as well. And then here. So we're going to go look to sell off of that level, 102.57. So we're going to sell on a retest. We had a level, a channel bottom. It was also a support and resistance level that was tested and then finally was broken. So it was tested 1, 2, 3, 4 times, finally broke it, and now we're coming back to retest. So we'll look to retest this level and see if we can get a quick sell on from here. And then down below us, we have 102.13. I don't think it can quite get that low. 102.13 right down here. If it pushed that low, where are we? That's 120 pips. I don't know if we'll get there. Looking to retest, if we did push down to the next support level, which is 102.13, I would certainly look to buy that, and that's simply because we're at the end of what our average trading range would typically be. We're actually far beyond it, so it'd be a great spot to look for reversals at that point. So if we do push down to 102.13, then we'll certainly look to buy off of that level. So I'll click Move to Buy, and we'll put an order on down there as well. So there you have it. I mean, that's pretty darn easy. We just simply walk through the daily regimen. It helps us collect all of our data. From there, once we have our data collected, we know what our channel tops, our channel bottoms are. We know where our support resistance levels are, and we know where the market is leaning to a positive or negative U.S. dollar. Then at that point, we can go in and place our trades. Now, of course, today, as I mentioned, is a very cautious day for us. We have to be cautious because this is telling us right here, when we see both of these moving the same direction, something's wrong, something's unhinged, and we have to be very, very careful in what we do. Because typically, when money flows out of the Dow, it flows into the dollar. So there's something else driving this, and this is just telling us to be cautious. As I mentioned earlier, if we didn't have a class today, I would stay out of this market. I wouldn't even trade right now, because what's happened in the past when you see this is you'll see a whip in one direction or the other, and anytime you see something that's moving in a way it's not supposed to move, eventually it's going to snap back and snap into place. So we have to be careful of that. So today is a very big day to trade cautiously. Tomorrow we have some additional news. Tomorrow will be an interesting day as well. Tomorrow we have the ADP report coming out, which is the precursor to the non-farm report on Friday. So expect some movement around the 8:15 to 8:30 time frame. Sometimes what will happen is you'll see an initial spike right around ADP, then it'll go flat, and they'll wait for these other reports to come out. And if they're all positive or they're all negative, then expect some big moves on Wednesday. Beyond that, we have our next class on Friday, which is non-farm payroll. So we would typically hold today and Thursday. What we're going to do actually today, and then our next class is Friday as we get to non-farm payroll and analyze that. Forex Joe will be on. We may have a special guest. I'm not sure yet. Need to catch up with Forex Joe later this afternoon and see if we're going to have a special guest on for Friday. If we do, we'll let you know about that. So there we have it. Let me see if Forex Joe popped into the room. And doesn't look like he did. So Joe's not on with us today, so let's go ahead and wrap it up. Of course, later this afternoon or coming into the London close, I will record a quick recap just so you've got that. And you'll know what was good, what was bad, how we performed on our trades for the day, and we put that out there for you. Keep in mind, trading is going to have losses. Just because we have a loss, it doesn't necessarily mean that we did anything wrong. It just means that the market didn't move with us, and that happens from time to time. Can't win every one. So as long as we're managing our losses and keeping them light, we'll be able to live the trade another day. So that's it for me for now. I'm going to go ahead and sign off, and we'll see you guys in non-farm payroll, which is our next live trading class on Friday morning. Talk to you soon. You guys have a great one. Bye.